All right, Tameka, we are live. I'm excited to have you today again.
I
Excited to
know, I'm
speak
so
with you.
glad to be here.
Yeah, we spoke a couple of weeks ago,
Yeah.
and then we wanted to answer a few more questions about the types
Type-
of loans that you
Yeah.
guys can qualify because I know that a lot of you all are trying to get into your homes before the holidays.
Yeah. Okay.
So we want to make sure you are ready to go. And I brought on Tamika again. Tamika is an amazing mortgage expert that's here to share information with you. So, Tamika, can you introduce yourself really quickly?
Absolutely. My name is Tomeka Purcell. I am the owner of PMG Worldwide. We are a minority owned mortgage company. My experience for the last 20 plus years have been a certified mortgage underwriter. So I took that experience and branched it off
Brandon.
and created the mortgage company so that I'm able to assist a lot of families looking to purchase homes.
Yeah, I'm glad I connected with you because you have literally given me so much information over
Oh,
the
good.
past few conversations that we have. A lot of lenders just kind of skim the surface
Hmm.
and just give you the basic information of just basic information, and a lot of people feel that they don't have enough information and don't move forward. So that's why I wanted to bring you on to kind of clarify the differences in the loans that people can get.
Okay, perfect, perfect.
So
So
let's
I'm gonna
start
just
there.
start
Uh,
down the line based on the programs that are available. So, and I'm sure that you got everyone has heard of FHA. So FHA will go down to, so most people can qualify for a FHA loan, which is Federal Housing Association. They can qualify for that loan with a 580 credit score. I
hmm,
don't recommend that clients come in at 580. But
hmm.
of course, if that's where you are, then that's where you are. You start there. The reason why I don't recommend coming in at 580, because when you start to try to purchase a home, you're only eligible for that one product. And you want to be able to be eligible for all products. So
Right.
I typically tell clients, you are good if you can get a credit score of a 640. 640 or better gets you qualified for every program. So every program that I'm going to discuss, you would qualify for.
Hmm.
So there's FHA loan you can get in at a 580 credit score. The down payment is 3.5% down for down payment. And typically for each program, you're going to be looking at about 3% in closing costs. So that's going to be 3% of whatever the purchase price is. So if you find a $200,000 home, then you're going to need 3.5% of 200,000, and then an additional 3% of 200,000 for closing costs.
Hmm.
FHA is typically for first-time home buyers. I know that you hear a lot of individuals that say find the first-time home buyer programs. Technically, I tell individuals there's not really a first-time home buyer program per se, but what they think about for first-time home buyers is someone who has limited funds and limited credit. So that's how FHA meets that criteria of first-time home buyers. So again, if anybody's taking notes, FHA, you can get qualified at 580. Down payment is going to be 3.5%. And then you're going to need 3% for closing costs. One of the good things
Hmm.
about FHA is that it's going to give you better rates. Of course, if you have the higher scores, because rates are based on your score. But FHA, government loans, that government loan gives you a better rate than if you were going to do a conventional loan because it's
Right.
based off the government. So the next loan that you guys are probably familiar with is conventional. So conventional can give you two different down payment amounts. They'll do 3% or 5%. Everybody's used to hearing conventional is going to be 5% down. So it was at one point, but then they brought on different breakdowns of what you could do for conventional. So those are going to be the home affordable. And what home affordable is it's based off of income requirements. So you can purchase a home using home affordable and do 3% down, based on if your income is sufficient for the area that you're looking to purchase. So wherever the county is, there is a county limit or an income limit for that county. As long as you do not exceed that income limit, you can do a conventional loan at 3% down. The current credit score for conventional is a 620 to get into that program. But please
Wow.
understand that if you do a home affordable loan or a home ready loan, those are two of these products that you could do that will give you 3% down. Understand this, that even though you're doing 3% down, the caveat for Fannie Mae, who does conventional, the caveat is that they charge you more for mortgage insurance. So instead of the normal, it's going to be 3% at a PMI or mortgage insurance premium that you pay, it's going to be like 30%. So it's going to make your payment high based on that. So just be mindful of that when you're looking to do 3% down for conventional loans. The other one is going to be 5% down, and that score is still going to be a 620 score for
Well, that's
conventional.
still not bad because a lot of people, and like you said, people are used to 10 or
Mhm,
20%
mhm,
down for a
mhm, mhm.
conventional loan. So, I mean,
Yes,
that's
yes,
really good.
yes. So then the next product you have is going to be USDA. So
Hmm.
USDA, as you know, when people think about USDA, they think, I don't want to do that. I'm going to be out in the country, right? But that is what it is.
Are you
USDA,
reading my mind?
right? See, USDA is for rural properties. But here's the thing that changed over the years, probably about 5 to 10 years ago, USDA was sitting on money and no one was willing to take the product. And USDA is 100% down. So there's no money down for USDA. You just have to come up with your closing cost. And what was happening is they could never, the Rural Housing Development Association could never get anybody to use the money. And of course, if they're passing out this money, they want you to use it. So what they ended up doing was going to a lot of the construction companies and having them build homes closer to the city limits, but still considering it a rural area. So as of now, if people are doing USDA a lot more, it's because the properties are starting to be more inward into the city versus when they were out into the country. So there is a website that you can go to. I will figure out what it is and make sure to put it in the
Oh,
link, but you
okay.
can go in there and pull up the website. And if you see a property that you like, you can type in the property address and USDA will tell you if that is in the area to do USDA financing. Now, for USDA, the credit score for USDA is typically going to be based on what lender you use, but it can go down to a 620 or a 640. USDA is also based on income requirements. So you have to have a specific amount of income, or your income cannot exceed a specific amount in order to qualify for USDA. USDA does not have any type of, they have a guaranteed fee, which is not considered a mortgage insurance fee. Now,
Mhm.
what you do have to understand with USDA is a little harder to get approved with them, not because of credit and not because of income, but because of debts. So USDA has a requirement for ratios, and the ratios are going to be 29 to 41. So your front end can be 29, your back end can be 41. It will make exceptions and go a little higher than that, but when you start going past 43%, then it starts to kick out ineligible for that product.
Oh, okay.
So if that's a program that you want to consider, just make sure you have very limited debts in order to get in, or you have a substantial amount of income, but the income doesn't exceed the limit, the county limit that you want to live in. It
Right.
can be done, but I always try to tell individuals ahead of time what the ratios need to look like, what the income needs to look like, and where you're stuck at to be able to buy for USDA.
Okay. Okay.
Um,
So one quick question, when people come to you, do you go through all of the programs with them
I
to
do
see
not.
which one
So
they
what
can?
I
Okay.
typically do is I look at credit, I look at income, I see exactly what they're looking to qualify for. Most people will come to me and tell me if they are looking for a USDA loan or an FHA loan. I will qualify them on as many products as I can and give them the best one that's going to offer them the best rate and the best payment and a minimal amount of closing cost and down payment. So I throw out, hey, this is what you qualify for. You can do this program. Let me know which way you want to go, because it could be very overwhelming for a client to say, if I go and be like, you can qualify conventional, you can qualify USDA, you can qualify, it just it get to be too much.
Yeah.
So
Yeah.
I
Okay.
specifically, if they come in and they tell me, so I ask the questions, and one is, what are you looking like for down payment? What is your closing cost looking like? And once I know what they have available and what type of payment they want to be at, it kind of lets me know where to place them in reference to
Mhm.
the program.
Right. Okay. Cool. Cool.
Okay, so another program that you guys have all heard about is VA. Um,
Yeah.
and of course, VA is only for veterans. You would have had to be in the military and receive a COE, and that's called a certificate of eligibility, where the government will give will allow a veteran 100% financing on their loan, and typically it's 100% financing for all. So very rarely do you see a veteran having to come to closing with a lot of money. So
Mhm.
that's one of their caveats of having served our country, is the government will give them a loan as a
Yeah.
veteran. Another good thing as a veteran with a COE is that you can use that certificate of eligibility over and over and over and over, as long as you restore your entitlement benefit. So it doesn't mean if you buy one house, you've used it all. No, once you sell that house, you can use it. And they changed the laws just last year. I think it was last year, where now they'll do 100% financing on all loan amounts. It used to be capped. So if you come and say you want to do
Wow.
$1 million home, then they're going to give you 100% financing for that. So yeah, that's one of the good things. But you're not
I
going to have
didn't know that.
going to be asking for $1 million, but
Right.
is
Right.
that is an option that you have for that. Another, this is not a program, but this is it's a gifts and grants that are applied to programs. So
Mhm.
there is down payment assistance. For down payment assistance, you are going to need a credit score of a 640 or better.
Mhm.
Um, and then they're going to also look at ratios and everything with the down payment assistance programs. But down payment assistance applies to mainly FHA loans that are required. It used to be conventional, but they have done away with that. I'm not sure if they have brought that back yet, but I do know that the majority of down payment assistance is going to be on the FHA products. So what
Mhm.
down payment assistance does is it will give you, it's like a soft second mortgage. So you would sign your first mortgage note, then you'd sign a second mortgage note. The second mortgage doesn't have a payment. And then after you have had that for about I think it's 5 years, depending on which one you get, it kind of forgives itself. So you don't have to worry about making the payment as long as you
Mhm.
stay in the property. So
Mhm.
if you sell it before that 5 year mark, then of course they're going to require the funds back when you sell the property. But
Right.
that is also another program. So these programs that I was telling you, FHA, conventional, USDA, VA, all of these programs are the traditional financing ways. That is what a lot of the lenders or mortgage companies are offering. They're offering um, QM, quality mortgage, or qualified mortgage loans, which are the traditional loans that everybody actually can get qualified for. So it's going to be W 2s, pay stubs, and even self employed borrowers that have 2 years tax returns. You're going to be considered the traditional mortgage, the qualified mortgage. And then there is the offset of individuals who doesn't actually have all of those pieces together. And mainly this applies to self-employed borrowers. Let's say a self-employed borrower hasn't filed taxes in 2 years. That's okay. They do offer like the DSCR. Those are going to be, it's a non-qualified mortgage, where they're going to give you a bank statement loan. They'll allow you to do 3 months bank statements, 6 months bank statements, or 12-month bank statements for personal accounts as well as business accounts. But understand, this is considered a non qualified mortgage. So it's not a traditional mortgage. So for them, this is much more of a risk. So they're going to hit you for the risk. They're going to give you a
Of
higher interest
course.
rate. They're going to make you bring a lot of money to the table. they're going to make, this is when your 10% and your 20% come into play. But what I always tell clients is this: if you do not have your income and everything in order, then you should expect that you're going to have to pay 10% or you're going to have to pay a
Yeah.
4% interest rate. That is going to apply, because it's the same as them saying, listen, you can't benefit off of the twos and the 3% when those individuals have everything in order. They gave me their pay stubs, they gave me their 2-year tax returns, they gave me everything with no risk. So they're not going to give you the same thing as they would someone who's actually has their I's dotted and T's crossed.
Right.
So they do offer the ability for individuals that don't actually have it all together in a box with a bow. They do have the bank statement loans for you to be able to utilize to qualify
But
for.
that's good because even if they do get that, just say for now, if they just say
They
their
can
lease is
refinance out of
ending,
it.
they want to get in, yeah, refinance out of it. And how
Mhm.
quickly can they refinance out of that though?
So typically they're going to be considered conventional loans, even though they're non-qualified. So after you've made your first, I always tell people to make at least 3 payments. You can go ahead and refinance that mortgage and refinance out of it, as long as you don't have a prepayment penalty. So for those individuals that are doing these type mortgages, make sure that whoever you're working with, they clarify if you have a prepayment penalty or not. And what a prepayment penalty is they will tack a lien, basically, is what you can call it, where if you refinance before 3 years, they can charge you for for that. So then you'd end up having to pay an additional 5, 6, or up to $10,000 in additional fees, because you are breaking the prepayment. You're creating a prepayment penalty. So just make sure. A lot of companies aren't doing it, but then there are a lot that are. And if you're not aware that that's happening, you can get into this mortgage, and then when you try to refinance out of it, you're unable to, because keep in mind, when you've made 3 payments, you don't have very much equity in it at that time, so that you'd end up coming out of pocket trying to refinance out of a heavier interest rate.
Right. Cool. Well, thank you, Tamika, for that. That really clarifies, it breaks down. And what I'm going to do is go in and to accompany this, kind of give them like a PDF to go with it. Sorry for all the noise.
It's okay.
Kind of give them like a PDF to kind of go with it to break it down because
Mhm,
a lot of people are kind of confused or kind of
mhm,
scared
mhm,
to talk to
mhm.
a lender because they don't know what to expect. But if they know what to expect in advance, if they have it right in front of them, that's why we're going live and creating this information or sharing this information. You can kind of hear what you have the options of before you walk
Mhm.
into that
Yeah,
conversation.
exactly,
So
exactly.
educate yourself in advance.
Absolutely, absolutely. And there
Yeah.
is nothing wrong with buyers or potential buyers reaching out to lenders and
Mhm.
explaining their situation. I tell a lot of clients, I'm like, listen, I can't give you the perfect scenario if I don't know the ins and outs of what you're going through or what you're trying to do.
Yeah.
So
Yeah.
always be upfront and honest with the lender and say, this is what I have, this is what I'm going, this is what I'm trying to do. And they should be able to give you a good picture of how the process needs to work and what will apply to it once you're trying to do it.
Right. Well, thank you, Tamika. Let everybody know how they can reach out to you, and also what state you handle. Let them know what areas you
Yes.
handle as
Okay.
well.
So anybody that has any questions, you can definitely reach out to me at my office. That number is 704-401-5288. Or you can feel free to give me an email, which is Tameka, and that's Tomeka at pmgworldwideinc.com. One of our numbers that you can reach is by text, because we have some individuals that prefer texting now versus being on the phone. So we do have a mobile number that you can text between the hours of 5 p.m. and 8 p.m. And that number is 704-231-3403. Or you can reach me on our website, which is www.pmgworldwideinc.com.
Okay.
Um, so I think you asked me one other question.
Your state, what
Oh
state you
yes, so the
handle?
states that I am qualified in, or where I'm licensed, are North Carolina, South Carolina, Florida, Virginia, We're working on Georgia and California.
Nice. And
Yes,
then
so
you're gonna be in
we're bringing
all
on more
50
states.
states.
Oh,
Right.
we're trying. We're bringing on more states. So
Good, good,
yes,
good.
and we offer all of the products that I was talking to you about, or I've explained. We offer every one of those: FHA, conventional, USDA, VA, DPA, bond loans, and bond loans are just a tack on. It's an addition to a regular program. It's kind of like a DPA as well, but it's just considered a bond, so we offer that as well. The non-qualifying products we offer, the bank statement loans. We also do asset depletion for anyone who is using assets for refinancing their properties. We offer that as well. I also am an expert in tax returns, tax transcripts, how you can qualify, what income can be used on the taxes. I am here to help any individual who may have written off too much income last year for their taxes. I can show you, hey, this is what you need to do. Don't write this off, and go over and look at everything. So we also offer credit analysis to our clients who may be afraid of that their credit may not be where it needs to be. Just definitely shoot me an email. And again, that's at Tameka at pmgworldwideinc.com. And we
Mhm.
will give you a free analysis where we've looked at your credit, and we'll tell you, where you can go. If you're looking at 3 months, 4 months, 6 months to get your credit, we're going to give you a breakdown of that and let what you're looking like. We also will look at your income if that is what you need, so we can tell you exactly how much you can qualify for, so that you're not out here looking at homes that are going to be above what you can qualify for, or looking at homes that are below what you can qualify for. So we'll give you, with our program, which is called Credit to Close, we'll give you all of that information so you'll know what to be looking for and kind of preparing yourself for purchases.
I like that you help with everything from beginning to end, credit to budget to
Yeah.
down payment to finance, and you
Yes,
help them.
ma'am.
You're there to hold their hand step by step. So
Yes, because I noticed that it's a lot of us that just need handheld.
yeah,
And I've been in this industry for a long time, so I see that some lenders or loan officers will just toss you out there like, "Hey, you can't qualify," and that's it. And
yeah,
they don't give you a solution. We offer
yeah.
solutions, we offer plans, so we help you along the way. My main focus is to be able to get those qualified that are actually truly interested in purchasing a home, and whether they realize it or not, it technically doesn't take. Some people think it's going to take years. It doesn't take that long if you're
Mhm,
dedicated and focused and you have a plan and someone tells you, hey, this is what we got to do. We're going to work on this. You do
mhm.
this. I've looked at your bank statements. It looks like you are spending $300 more than you should. I want you to take that $300 and put it here. It doesn't take long at all when those that are serious and dedicated about doing it.
Yeah. Okay. Well, thank you so much, Tamika.
You're
For those of
welcome.
you that missed us a couple of weeks ago, we went live 2 weeks ago and spoke about the mindset of it all. So
Yeah.
you might want to go back and check that out, and then share both of these with your friends, someone that needs it. So
Yes,
thank you
absolutely.
again. Thank you
Thank
again,
you.
Tamika,
Thank
for
you so
joining me.
much.
Okay, you're welcome.
Alrighty.
Have a good one.
You too. Bye bye.
Bye bye.